All Money In, Minority Chasers podcast. And you can see me smiling from ear to ear right now because this is one that we've been waiting for quite a while. We have the man, the myth. He's not a myth, but he's a legend. We have Brian Barnes to join the show today. So Brian, tell us how things are going with you right now.
With that introduction, things are going pretty well. I wish every interviewee started with that, but no, things are going quite well.
That's awesome. We're basic investors. Our podcast is called Minority Chasers. We're just basically, I guess, retail kind of experienced investors ourselves, and we kind of have been doing this for quite some time now. But let's get into everything. So the first thing that stood out, I think I was the one that, Fundo hit the group chat with this, was you start trading when you were 10 years old. Tell us about that. That's crazy to me.
Yeah, so I think there were sort of two reasons for that. One, parents just were in the sort of tangential to the finance industry, but my dad was a big manager of his own money, like did it as a hobby, and so he exposed all of myself and my siblings to it at a pretty young age. And then that also coincided with a early fifth grade project that we had to do a report on a company, and it was learning about the stock market, but also learning about different companies and the like. And then we did, in conjunction with that, a trial of you had a fake investment portfolio, put money to work, and whoever won something silly. It was probably just a mediocre trophy at the time. But in conjunction with that, my parents sort of said, hey, if you're doing this from a school project perspective, let's expose you to the real thing. Here's a real brokerage account. You click buttons, real money gets moved. And from an early age, I was just captivated by it. Both the notion of, hey, there's an ability to do something where you can make money and, sort of like eyes lit up there. But from evaluating what a company is worth was just this really hairy intellectual problem. And I think I was a curious enough kid that really liked to dig into it of, hey, here's this company that is operating in the world. It has competitors. It serves a product. How can it compete out in the environment? How can it, do a qualitative assessment of the competitive advantages of the firm? And then you're doing a quantitative assessment of what do you think that's worth? If you're right, you make money. If you're wrong, you lose money. So it was just intellectual problem with stakes attached, which from a young age got me captivated. I'm guessing my complexity or sophistication increased over time. I don't know if my 10-year-old perspective was anything to write home about, but I did get exposure to it early and became a penchant and hobby of mine.
Definitely.
That's just so incredible to me because I got into investing like very, very late, especially around like 20 years old, but I'm more into like the technical analysis aspect of it. I don't really understand too much of the fundamentals still, but to just hear something like that is so great. And it's like kind of one of the reasons why we started this podcast, to really just inspire like more my people in minority groups and just younger people to just like invest. So yeah, that's incredible, man.
No, absolutely. I mean, you say that you got into it late 20 is earlier than the vast majority of people. I mean, half of people don't invest or buy stocks or anything like that at all. So you're well ahead of the curve. And I do think it is similar to, exposure to any skill, whether it's learning a language, learning an instrument, learning a new sport. Starting early helps a ton. You sort of like just natural fluency associated with all of those topics, as well as the ability to experiment. I mean, you said that you're doing technical analysis right now. You can have exposure to that. You can learn more about the fundamentals. You can learn more about, 10, 15 different mentalities of investing or trading or the like, and get exposure and see what resonates with you from a principle perspective, as well as just a mindset and, like how you react to things. And there's a lot of ways to be successful in money management. And, M1 and I are probably more geared towards long-term systematic investing, but there's a whole bunch other out there that are no worse. They're just different.
Yeah.
Definitely. So you come across that path, you kind of mentioned how that kind of led you to M1, and then you kind of add your own twist to it. I feel like your story is not like kind of a straight path, kind of like a little winding road. So you come with a twist of it to fractional shares. So how do you initially come up with investing in fractional shares?
Yeah. So, I got exposure at sort of 10, 11 years old, and then, did that middle school, high school into college, did undergrad at Stanford, and worked at a hedge fund doing equity research for a bit. And really how I managed my own money is I had a commission-based brokerage. I used Ameritrade at one point, switched to Options House, then switched to Interactive Brokers as sort of my sophistication and progression grew over time. But I had a spreadsheet of this is the portfolio I wanted to maintain. I wanted this amount of exposure to this asset class, and then of that asset class amongst these different companies. And it was trying to say, control the portfolio as a whole. And I was exporting my entire positions from the brokerage, doing it in Excel. It was outputting the amount of trades that I should do. The math never lined up perfectly. So, with a paycheck, it would say buy 7.31 shares of this security, and you would just round up to 10 because it's, not worth the effort. And it was really in thinking through that and sort of the process that I went through of saying, software is a lot better at this than a human is, sort of going through the manual inputs. You should be able to tell a platform, this is the portfolio I want to own. I want at any given time, 10% of my money to be in this investment. And then you should just be able to deploy money against that portfolio. And the software should do the calculations to see how much it should go into. And you shouldn't really be limited into these discrete quantum of shares. They're like, it shouldn't matter if a share is $30 or $60. If you want to buy $50, you should be able to buy $50, any dollar amount of any security. So it's sort of the combination of how I manage my money, as well as sort of saying, if this is digital, it really doesn't matter the amount of whole shares. If you fractionalize it, you can do any dollar amount into any security. And truthfully, it just makes the math work out better. So, if you had $500 with your paycheck every 2 weeks and you wanted to put that into an investment portfolio, 100% of it can go to work across many different investments, and you don't have excess cash left over.
Right, definitely. And one thing I do like about that is it kind of forces the investor to invest more long term, right? So like with any other typical broker, they're probably just day trading more, but with this, they're carefully picking out the companies that they want to put their fractional shares in, and they're just constantly just adding to that. So they're building more of a growth portfolio. And I want to ask you, is that one of your goals personally, to make this more of a long term for like an investor?
100%. Yeah. So, if you look at any company, there can be no news on the company and it can fluctuate plus or minus 3%, 5%, 15% in a given day. And I can guarantee you the company is not worth, 3% less or 5% more in some sense. And where it trades is an approximation of the value, but nobody knows what something's worth at 10 a.m. versus 10:15, and saying those are two different numbers, even though they'll trade for different prices. But what you really can say is, I want to buy an ownership stake in that company. And I believe that the ownership, I'm getting a good or reasonable price, and that the company, what it does day in, day out over months, years, decades, is going to increase in value over long periods of time. And if you have that perspective, it doesn't really matter in the grand scheme of things if you got in on a Monday at 2 p.m. or a Thursday at 11 a.m. 6 years from now, it doesn't matter. It's really, did you buy an ownership stake in that company, and did the company perform, to its potential or more or better and the like. And so, yeah, M1 is much more about viewing investments as ownership stakes in companies, and then managing your portfolio accordingly and managing it over long periods of time, as opposed to trying to play the price movements in a short amount of time.
Yeah, for sure. I think it definitely takes the emotion out of investing. M1, what you guys have done is like game changing, because it allows people to pick and choose whatever companies they'd like and pretty much craft their own ETF essentially, and just ride that for the next 10, 20 years.
Yeah, absolutely. Yeah. So like anybody becomes their own, almost like portfolio manager, mutual fund manager, ETF designer. And it really is a aspect of, like, you can have as much control or say as you're comfortable having. If you're not sure, we do have a huge template of portfolios where it's, index ETFs where it's, hey, this is prudently managed. But you can have engagement. You can have buy-in. You can say, I want to own these securities because of belief in their products or services or their value potential over long periods of time. And that really creates a sense of ownership and engagement that you don't see when you outsource it completely and hand it off to an advisor. And so that buy-in, that ownership, that like actually caring about your finances really leads to significantly better outcomes where, people want to contribute more. They want to learn more about the companies. They want to learn more about finance. And we think that that's the right balance of not getting too oriented in short-termism, but having enough engagement where it's fun enough that you actively want to participate.
And I've noticed that like day trading and constantly just trading more and more and more to get most returns turns to be more emotionless. Whereas in actually investing your life, your soul, and your time into finding out what the company's doing, where they're heading, it's kind of more emotionful and it makes it more meaningful. So if you take a loss, it actually means more rather than you day trading, losing, and then you go back and then lose and repeating that process over and over again. So I feel like the use of fractional shares that helps you calm down and actually let you understand like how you're trading. Yeah.
For sure. You know, one of the tough things about trading is it's really hard to know why things go up and down, and there is a lot of random noise in it. And so if you're right, you're not exactly sure why you're right. You just happen to make money. If you're wrong, you're not exactly sure why you were wrong. You just lost money. And so, you know, it like the positive or the fun thing on trading is you can make or lose a lot of money in a short amount of time. And so it is emotion filled, which can be enjoyable. I think the thing when you're making investment decisions, it's, are you comfortable owning this? And are you comfortable owning it if the price goes down a ton, if the price goes up a ton? And it shouldn't really matter if you don't plan on selling for 5 years. And ultimately, like in 5 years, the new value will be based on the prospects of the company at the time. And it's, if the company did as well or better than expected, it's very likely to go up in value. If the company went down or didn't perform as well, it's likely to go down. And so it is quite understandable of what led to the results. And so it's, are you able to, have a vision for the future and make bets appropriately and buy ownership in things that are producing value? But it's quite a bit more understandable than, hey, I bet at, I bought at 10.02 and then it went up, a point and I sold at 10.07, but I have no idea why. And because I don't know why, it's very hard to repeat. And, how do you become successful the next time around? And so it's just different framings. And then I personally, and as a result, M1 are much more geared towards that long-term investing mindset where you're making decisions that play out over years, if not decades, rather than, in 2 days' time when, the fundamental intrinsic value of a company, it's pretty hard to change in a 2-day time period.
I was kind of wanting to go on that long-term discussion. I hope this is not too off. I'm not too off on a tangent. I saw one of your previous interviews and you talked about your sentiments about long-term perspective about investing and everything. And I'm just kind of wondering what your take is, if it's still the same, because I believe it was 10 months ago when COVID was really just hitting and the market was going crazy, fluctuating long-term. You said sentiments were still you believe that the economy would recover, the stock market would be great in the long term, right? But now we have a new administration, and this administration is very adamant on stimulus, and people are now fearful that we're in a financial bubble, and also with fearful of just the stock market just being overvalued and overheating. So you have any take on that?
Yeah. So, I've joked with friends and people at the company that, if you went to January 2020 and you got the news headlines every, the first of the month for the next 12 months, so, through 2021 ahead of time, and you said, hey, bet on the market, what is it going to do in a month's time, 3 months time, 6 months time? With knowledge of what happens in the future, you'd be wrong. You'd probably hey, we have a global pandemic shutdown. Stock market's probably going to go down. Stock market is at an all-time high. And so I think there is a little bit of humility associated with long-term investing of, I don't know what things are going to do tomorrow, the next month, 6 months from now, a year from now. But what I do know is when I buy an ownership stake of a company, they're doing anything and everything that they can to increase the value of that over long periods of time. And so, whether I buy individual companies or a basket of companies or a diversified portfolio of companies, I do think on the aggregate, I am very confident that in 10, 15 years time, they will have accrued and generated more value than when I started with. And so I'm very confident of and optimistic that given a sufficient long time frame, things will be better in the future than they are now. Okay. I have no idea what that means for the next 6 months or the next year or anything like that. And we all have our takes, and I think we see how they play out. But I don't have a lot of confidence. I could name a number of where I think the market's going to be in 6 months. I think it would be a pretty wet finger in the air.
Yeah,
guess.
Of course. I just thought it would be worthwhile to just see like if you changed your opinion on that.
Yeah, I mean, I probably have a bias towards where I think it's going to be. I do have to be delicate around giving specific market predictions just with the like, but yeah, no, like I think maybe a better way to do it is, if we sort of analogize it against sports, I think it's a lot easier to say, who's going to win the game, and that's a like interesting question versus who's going to score the most points in the third quarter. And I think in some sense, like, where is the stock market going to be in 6 months is sort of that, like, who's going to score the most points in the third quarter. It's a little bit more random, a little bit more variance versus who's going to win the game. Typically, not always the better team wins. And so, I think it's sort of a, where do you have conviction enough to place your money and place bets? And I have a lot more conviction given a long sufficient time frame. I don't have on a short time frame, I am just a little bit more nervous, and it's a little bit of like, I don't know better than anyone.
Okay.
I guess it's one of your huge milestones is 3 billion assets under management. And I remember when I got that email, I was like, what? I just signed up for M1 like a year ago. That's insane. So is there any first, could you speak on that? And is there any upcoming milestones that you guys are hoping to hit within the next year?
Yeah. So, I mean, from a growth perspective, the company is about 5.5 years old, and we launched to the public about 4 years ago. And so when we launched, we were close to zero. It took us probably 18 months to get 100 million on the platform. We then, 18 months later, hit $1 billion. And we to start 2020, we had 800 million on the platform. We now have over 3.5 billion. So we've added $500 million since we sent out that 3 billion email. And so the company is growing fast and compounding. And so we've quadrupled our assets over the last year. I think now it's like every incremental billion is going to be fun, but now it becomes, when do we hit 5? When do we hit 10? When do we hit 20? And big, more meaningful milestones, and trying to do that in a reasonable amount of time. And so those are like the big asset milestones. I think from a product standpoint, we offer the investing product, which we're best known for, and is what we launched with. We also have a borrow product where you can borrow against your portfolio at really low rates, and then a spend product, which is an integrated checking account. And I think while we're going to go much deeper in the invest product, but we're also going to add additional borrow products and additional spend products to really make M1 a very robust personal finance platform, as opposed to just a best-in-class long-term investing platform.
Okay, so do you guys plan to make it like a one-stop shop for all your financial needs?
We do. Yep. Okay. Yeah. We want you to come to M1 to manage your finances or your money, not just your investment. So, we view your finances as how you invest, how you borrow, how you spend, and we do want it to be all under one umbrella and one roof.
From an entrepreneurial aspect, typically whenever someone starts off an invention, it's always like the beginning is always hard, and like you're always trying to bring it out and show it out to people. But then eventually you reach like a certain type of tipping point, and that's when like there's just an avalanche of just like everybody's coming in to like jump in. And do you feel like as if M1 has like reached that point yet? Because 3 billion is a big milestone. 3.5 billion, I'm sorry.
Yeah. Yes and no. So, in the early stages, a lot of people were, hey, neat product that you've created. Sounds fun. I might try out with, $100 or $500. Very few people said, hey, there's this new company. I'm going to trust it with my entire life savings. Mm-hmm. And so, that was where it was really tough to move from, being a sort of an online toy to an online financial platform that you would use instead of Charles Schwab or Fidelity or Ameritrade, E-Trade, or any of the big, bigger players. Now, I think we've crested that, we have hit as high as the top 10 app stores or apps in the finance category of the App Store. We have 3.5 billion. We have, 25,000 5-star reviews. We have a subreddit with 27,000 members, commenting how they use M1. And so that has led to a ton of credibility where people do have $250,000, $500,000, $2 million accounts at the other big players that they're bringing over to M1. And that's really what's driving the asset numbers up in a very meaningful capacity. Is we've had a tipping point where we've established trust with the user base, where people are actually comfortable using it with their life savings, where that was quite difficult in the early stages.
So now that you're gathering such a large user base, and I'm sure you probably had some thoughts of this, is there going to be crypto being introduced?
So we get that question a lot. we would have thought that there would have been a crypto ETF or something like that by now that we would have sort of gotten for free by offering the service. Our user base does ask about it a lot. It is something that we consistently talk about. We don't have immediate plans to offer it. And I think when we do, we'll try to say, hey, can we do a M1 specific take on it? Can we, make it part of your investment portfolio or investment pie and have it be automated and the like? And so, we have a lot of frequent conversations, but no short-term plans to add crypto.
I know lately there's been a increasing interest in more active ETFs. So I was kind of wondering if M1 would consider doing something like a dynamic portfolio where, how you're able to share your own pie with friends and family. Sometimes you make changes. I'm not sure if those changes apply to everyone you've shared those to. So is it like a feature that M1 would consider adding, like a dynamic pie that would give a notification to the person you shared your pie to, and if they'd like to make those changes that you've made?
Yes, yeah, it's a great request and something that we have heard from our user base, and so yes, we are absolutely exploring it, and I think we're trying to figure out the best way to do it, where make it very clear that if you take this dynamic pie, either changes are going to happen by default, or you have to opt into it, or it's gone forever. I think the unfortunate scenario is if we made it optional for every single changes, it just gets into if this pie is shared 1,000 times, you can then have 1,000 different versions of it floating around, and it's hard to keep track of the original one, and if they make a change that you don't agree to one time but you want to agree to the next thing, how does that sort of influence your portfolio? And so it's a very interesting user experience question that we play with a lot, and I don't know if we've figured out the best path forward to it, but it is something that we're exploring, of being able to follow people, use their ideas, have dynamic adjusting pies that you can sort of defer to an investment portion decision by someone that you trust to make them.
Awesome.
Okay, I can't let you escape without though. So the whole GameStop, AMC saga and everything that happened. Have you watched The Office before?
Yeah, the TV show.
Yeah.
Yep.
I don't know if you remember that episode when Michael's talking to Oscar and he's like, "Can you explain this to me like I'm 5?"
And then you go, yeah. Yep.
Could you explain that to me like I'm 5?
Yeah, for sure. So, from the beginning, there's a way to bet that a security is going to go down, and it's called shorting. And so the way that shorting works is a person says, hey, can I borrow the security? They borrow it from someone, they then sell it. And so without actually owning the security, but just borrowing it, they sell it. And then at a later time, they have to buy it back and return it to whoever they borrowed it from. GameStop was a incredibly heavily shorted security. And so that meant, a ton of people had borrowed significant amount of the securities, lent it out, and they're hoping that they can buy it back at a lower price. And so it was actually something that more than 100% of the shares available were borrowed and sold to another party. And so, there was more shorts than the available float. Reddit, GameStop, they sort of honed in on this and said, hey, one, we think that this company might be worth more than it's trading for. Two, if this security goes up, the people who are short start losing money, and there's a chance that they lose so much money that they have to cover their position, and them covering their position to stop the losses involves them buying the security to hand it back to the person that they borrowed it from. And so it's a weird scenario where people who are betting, it's called a short squeeze. People who are betting that the security is going to go down, who once the security goes down, due to the dynamics, actually becomes a buyer of the security, which forces the price even higher. So it's this, sort of weird market dynamics where A short squeeze is when people who want the security to go down are forced into being buyers and as a result drive the price even higher. So that's what happened. Reddit was on this. It was, driving the price higher and higher. And the people on the other side of the trades were primarily major hedge funds. And so, Melvin Capital is the sort of notorious name in there. But Melvin Capital was betting, short the security, losing an incredible amounts of money as the price went up. So that's the dynamics that sort of set up everything. And, GameStop went from a, $5, $10 security all the way up to $300, $400 security, a market cap of less than $1 billion up to $20 billion. And then ultimately what happened is it has to get into sort of the plumbing of the back end, how trades are settled and cleared. There's a central party called the DTC, which clears all trades. There's a group outside of that called clearing houses, which are sort of, there's maybe 150 of them. And then there's brokerage firms outside of that, which may be, 4,000 brokerage firms. And then all the customers are outside of that. So you have almost these concentric circles. The central clearing firm said there's an incredible amount of risk in the system. There's a chance that people who are on either sides of the trade are bankrupt and can't fulfill the trade. And so they said, when you make trades in these securities, you have to post all of the money up front to prove that you have the money to settle these trades, and no one's going to go bankrupt in this scenario. Ultimately, some clearing firms and clearing houses, that sort of inner ring, didn't have the money and said, we don't have the money to place trades. And so they cut off access, and some of them cut off access completely. Some cut off access to just the buy side. Robinhood is large enough that they have their own clearing house. And so they made the decision, we're not going to support buying on the security. We're only going to support selling, because every time someone buys, we have to post more and more collateral, and we just don't have the money to do it. We are not as large as Robinhood is. And so we use an independent clearing firm called Apex, and Apex supports a lot of the other fintech brokerages like Webull, Publix, Stash, SoFi, Betterment, even though Betterment doesn't do individual stock trading. But Apex unfortunately told us about midday, we are no longer going to support trading in 3 securities, GME, AMC, and KOSS. And so we put out a release to our user base that unfortunately, as a result of M1 getting our access cut off, we're going to have to cut off access for you all. And so, unfortunately, we were similarly forced into the scenario, but it spilled over onto our customers. And so that is hopefully the explain like I'm 5, and if you can do the Michael Scott explain like I'm 3 or something like that, and I'll try to do a better job. But that's fundamentally what happened from the market mania a few weeks ago.
Well, yeah, especially, do you worry, especially since this blew up all over social media and Congresswomen like AOC and Senator Ted Cruz got involved with it? Do you worry that some form of government intervention may come about because of this?
Yes and no. I mean, I do think regulators do have the best intentions, and so they're trying to have a fair, orderly market, not have investors harm themselves, or have catastrophic events happen in the marketplace. And so I think they're well intentioned. I think the downside is sometimes they can get overzealous and put things that are quite expensive for a firm like M1 to adhere to, and we have no option but to pass those costs, those compliance and regulatory costs onto the user base. And so in some sense, by increasing the regulation, it actually does increase the cost of investing and trading and the like. And so it is this delicate balance to be figured out. The thing that I think, as people dig into the situation, I think what they're going to realize is a big portion of this was stock trading. But the thing that really led to more outsized risk was option trading around this. And so, options are like derivatives of equities. They're relatively complex, and you can have a bunch of different strategies around it. But in the grand scheme of things, with very small amounts of capital, you can set it up so that you can have incredibly large payouts if something very rare happens. And this is very similar to the rare thing. So it's almost like buying a lottery ticket of you put forth $1, but you have the chance of winning 300 million. So small amount, big dollar ticket value. That was happening in the options market, where a lot of these people who are buying out of the money calls for $200 had what seemed like no reasonable chance of the security going up, but it actually did. And, that meant with very small sums of money, it made for incredibly large potential payouts that made it so that, it was a risk that other firms wouldn't be able to put this in. And so, when I look at it like equities are not all that risky. What was really risky is these options that, sort of have disproportionate impact to the amount of capital that was put up front from the trade perspective.
Okay.
I think the bigger thing that came out of all of that is that you need to give a raise to your PR team, because they got ahead out of it like very quickly, and like they were very upfront. Whereas Robinhood didn't really get ahead of it, and other brokers as much as you guys did. But I mean, that's a big shout out to you guys.
Thank you. I appreciate that. Yeah, we know our customers were the ones who ultimately suffered, and broadly retail did, because they were on the winning side of the trade, and then the rules were changed. I do think when it happens, the only thing you can do is be as transparent and honest and open as possible, and that's what we tried to do. I do think different firms, tried to hide things or dance around the issues, and I think they would have been much better off just being very transparent about what took place.
Yeah. Have you ever been on WallStreetBets before?
I have, yes.
What are your thoughts on that?
So I mean, like, I have to be maybe a little bit cautious here. I'm a Reddit lurker, so I've had my Reddit account for 8-9 years. While I follow all the investing things, and so stock market investing, WallStreetBets. I think there are times it's incredibly entertaining. I think there are times when it's a little bit off-putting, and then so it's a combination of those two. It's there are times I chuckle, and then there are times I grimace a bit when I'm reading WallStreetBets.
See, that's the thing. You don't have too many social media accounts.
No, I don't.
Okay, so what I was thinking is that you could hire us, so we could that was something bad about M1. Since you can't defend yourself, you could hire us to defend you, and get some fractional shares on the side. But we could talk after, though.
I appreciate the suggestion. We can talk afterwards. I have seen M1 come up a few times on WallStreetBets, and I don't think our mindsets are perfectly aligned. So they don't give us a lot of love in that in the forum.
Definitely. So your role has definitely grown in the time that you've leading M1. But how would you say your day-to-day has changed from when you first started versus now that you have a huge team running everything?
So it's changed dramatically. So, M1 went from just me to me with a few people around a kitchen table to a team of, 15 to a team of 25. And now we have 125 people working at the company. And it is, when things are small, when it's, you and 5 other people working on everything, it's not like the amount of work changes. You still have to do operations and marketing and legal and compliance and product development and engineering. It's just you have fewer people to do it, and so you jump in a lot. You do a ton. So I've written my fair share of our legal contracts, all the emails that go out to customers. In the early stages, I was answering the phones when people had different questions of support. And so you really have to, anywhere where you don't have a person who is dedicated to that job, it almost falls upon the CEO or the entrepreneur to fill the gap and sort of be the utility player. You're both the most senior person at the company and the most junior person at the company. As time develops, we have the resources to have people own different areas. And so you don't have to jump in as much. And then it really becomes around leading and organizing a team so that everyone's marching to the beat of the same drum and marching towards a similar vision. And so it becomes much more about being very clear in here's where we're trying to get to, here's why we're doing it, here's how we're going to do it, here's the different ownership and responsibilities for the different teams and people, and who we're going to hold accountable. And so it becomes much more of a leadership managerial delegation effort rather than just get all the work done. And if there's no one to do it, you jump in and are the person who has to pick up a lot of the slack. So it's changed quite dramatically as time goes on. from the get-go, an incredibly talented team has backed me up, and we've had a lot of people with the same mindset as me. And so, I'd say, we have a big cultural value of ownership at M1, and sort of treating it like, hey, this is your baby, this is your company, act as if you own it. And as a result, it's made my life quite a bit easier.
Are you looking for like a Bezos move where you step away as a CEO? I
think Bezos might have made it after 30 years. My hair is still here. I haven't gotten as buff as Bezos, so I think I still got a few years ahead of me before I pull a Bezos.
Definitely. I personally still think though he's a shadow CEO now that he doesn't have to take too much blame. He just kind of lurking a little bit.
I think it's very hard to have started something, built it into a potentially multi-trillion-dollar company, and not have any say in the day-to-day. So yes, I think he'll be pretty heavily involved, despite him not doing it, not having it be his full-time day job.
Mm-hmm. Is there any chance that you guys go public? And if you do, would you go SPAC or IPO?
It's a good question. So will we go? I would love to at some point. We don't have immediate plans. M1 has a lot of growth ahead of us to be a public company. And so, I don't see it in the next year or two, but something that, 2+ years from now, we would absolutely love to be a public company. And then it's a big question of, what makes sense at that point in time. That SPACs are relatively recent. I think, if we were to do an IPO now, if we were at the stage where we were ready, I think SPACs are a great alternative, or, a great option. I think in, 2 years time, there might be different legislations, or there might be a new thing entirely that allows you to be public. And so I'm just kicking that can down the road, but hopefully a decision that we have to make at some point.
I just wanted to ask, like, any personal goals for yourself at all?
For in the early stages of the company, it's pretty difficult to maintain balance, that your life becomes work pretty much in the company. And there's, just like so many outstanding risks, that M1 more or less started from an idea or a PowerPoint, and we're trying to go head to head against Schwab. And Schwab, will spend hundreds of millions of dollars a month on marketing and, tech development and resources. And they have, 30,000 employees working on it. And so, it's an uphill battle, and it sort of takes a little bit of a crazy person to go down that journey. I think as time goes on, like the team is now big, stable, robust. The brand name is out there, the product's out there, it works. We have a user base who is enjoying the product. They become our marketers and they tell their friends to use it. We have, ambitious people doing podcasts, requesting me on, and I'm sure we'll get some followers from that. And so it's a lot to get the ball rolling, but then once the ball gets rolling, it picks up momentum. And so I think my personal goals are to have a little bit more balance, to, sleep a bit more, focus on friends and whatnot, things that, are ultimately more important than, company success, but just unfortunately fall by the wayside as you're starting a early stage company.
Something that I actually plan to do is kind of like a little fun thing I'm going to do one of these days this week is I'm going to change my name to Brian Barnes. We have a Discord that we trade in regularly. And the whole Discord has just been anticipating this interview for the past 2 weeks. But I'm going to change my name, and then I'm going to say something random tomorrow, and everybody's going to think I'm you. Eventually, we're going to get you in the Discord.
Yeah. You do it well enough, you can have my job. I mean,
Definitely. We'll get you in the Discord, and then they're going to think that I'm still you. So they're going to be asking me all the questions. But then
I like it. We'll have to, you guys will have to release this interview after we do that, but send me an invite to the Discord. We'll get it set up.
Definitely.
For sure. What else are you guys planning, or I don't know if you can tell us what else are you guys, what's next for M1 besides just continuous growth? And, are you guys planning to offer some a credit card where instead of cash back, you might offer stock back and then that gets reinvested to the pie, or something? Have a one-stop shop for all your finances and maybe insurance. I don't know. What's next?
It is a great great question, because we are going to go down the credit card path. And so we have a debit card offering, and, we'll move into the credit card offering for richer rewards. And like you mentioned, we're going to try to do a lot of creative things, like having the rewards go into your investment portfolio, rewards based on what is in your investment portfolio. And then we also have that borrow line of credit, and using that to make sure that your credit card is paid off in full in every given month, so that you never sort of tip into the scales where you're paying, 18, 22% annualized interest on a credit card balance. And so, we are trying to say, hey, you come to M1 to manage your money. You replace your checking account, you do all your spending through the account, you do all of your investing through the account, and ultimately you do all of your borrowing through account. And we work really hard for all of those products to work together seamlessly, so that they're automated and the whole is greater than the sum of the parts. And so, we have a incredibly long list of new features and functionality coming out that will be across invest, borrow, and spend.
Yeah, I think you guys are going to be eating a lot of market share. So we're going to have you back in a couple of years where you guys are managing $1 trillion under management.
Yeah. Anytime you guys send the invite, I'll be here.
I was going to ask if you had anything to ask us. I mean, you see 3 very handsome men sitting in front of you.
Yeah. What's your guys' secret? How do you guys? No, I mean, like, how is the podcast going? Like, what got you guys started on investing? How did you guys get the idea to do the podcast and the like? Would love to hear the backstory.
Really, I guess Janil is really the one that's always been the one that's like been in the long-term investing. And so he's kind of just like gathered all of us, and like we all like started to learn different aspects of it. I like really picked up like the day trading aspect, the technical analysis, like I mentioned earlier. So eventually we were just like, hey, why don't we just start a Discord? Because we know a lot of people, especially like our age, don't take the time to start investing or care about like what's going to happen like 30 years from now. And so we started a Discord, and from now on we just slowly grown it, and it's become like a bigger thing. And then Quasi had the idea of starting a podcast, and now we're here.
Yeah, pretty much. I started investing like in high school. I think it was like senior year. And actually, it was one of my other friends, Steven, who's also in the Discord. He got me involved with investing, and that kind of led me down this rabbit hole of just getting super interested, just like you did. And then I just fell in love with compounding and just trying to grow my money, having ownership in companies that I believe in and I really like. I hated seeing people struggle. That was like the biggest thing. And I saw a way for me to grow my wealth. So I was just like, let me share this with everyone. So Quasi was actually one of my roommates. I got him involved sophomore year, and then senior year, Dorian, Edgar, Funda was a mutual friend, and just sort of just getting everyone involved, just sharing the knowledge. I didn't see many people being involved with investing at the time when I started. And now it's like kind of blown up, which is kind of crazy. So now everybody's
You
involved.
guys started the trend.
Yeah, no, it wasn't us. It was Reddit. Reddit started it.
Yeah, no, I love it. We need to clone more of you guys to be evangelists for it. That, yeah, finances are important, and investing is the most straightforward and sure path to building and managing wealth. So yeah, the more people learn earlier, the better off they'll be over the whole of their lives.
Definitely. Thank you for coming on. I mean, I can't wait till we can like run this back. I'm already fanboying a little bit myself. But yeah, very exciting. Thank you for coming on. And we definitely got to get you in the Discord. Like, definitely got to get you.
Send me the invite link.
We're gonna get this, man.
Yeah.
For sure.
No, it was awesome. Really appreciate meeting all of you, and thanks for inviting me on.